All right, folks. Tabitha here from Positive Real Estate. I'm head of coaching for Positive Real Estate nationally. I've been with the company coaching about 10 years. I've been investing for close to 20. So over that time, like anybody that does anything for a long time repeatedly, you begin to get you have some lessons along the way. You see certain patterns. And it gives you a better perspective because you've got the longevity, obviously, to get rid of all the sort of small bumps and anomalies and to see true patterns and stuff. And one of the questions I get asked about over the years is certainly apartments versus houses, which is better as an investment. Now, in the early days, I would have said houses. In my mid stage of investing, I would have said apartments. Now I have a slightly different perspective. Basically, the first thing you've got to know is your strategy. If you don't know what your strategy is, then you've got a problem because you don't know what type of stock, what type of property is going to get you the result that you need. When I say strategy, I mean what are you buying, at what price point, in what area, what market, what is driving that market, and what is most in demand in that market. And is that a long-term demand or is it a short-term blip in a longer-term stagnant market? And it's really important you understand this stuff. And it was something that I didn't. Now, when I first started investing, I believed that doing tricky stuff and stuff that not everyone did was going to get me a better result, that was the special, the holy grail that nobody else knew. I was always looking for the secret sauce. What I now know, guys, is that once you understand a strategy and once you understand markets, you've got to take that long-term approach, which we know as investors, but there's more to it than just throwing a dart and buying in any major capital city. You've got to understand, like I said before, the micro details of those markets in order to get the best result. Now, I've done everything from strata titling blocks of units to buying apartments individually to doing renovations overseas. You name it, I've probably had a go at it. Sometimes with great results, sometimes with mediocre results, and sometimes with some ouch moments. And so what we do with our program, working with our clients, is we show them how to avoid the ouch moments, yeah? And markets don't always perform when you want them to. However, if you're in it for the long haul, usually you get a great result. Now, when I look at my two best performing properties, I have a house in Melbourne that has performed very well. It has performed... it has tripled in value over the last, probably last 15 years. Then I have my other best performing property. It's actually an apartment in Sydney, and that's done a similar thing. I bought it for $400,000. It's worth just over $1 million today. Now, I bought that in 2009, so it's had some time in the market to do its thing. At the time, I had only $400,000 to spend, and my strategy was, what is the best quality property that I can buy for my money in a market that I'm sure is going to get some growth based on some research that I was privy to at the time. I wanted as close to inner city as I could get. This apartment's about 7K in the inner west, and I didn't want to go out into the middle ring or outer ring at that time. That was my strategy. So therefore, I couldn't afford a house, so I chose an apartment, and that apartment has performed really well. Sometimes we have these preconceived ideas, particularly about off the plan, which is a very much maligned strategy. It's often associated with some ups and downs in the market and people not being able to settle and all sorts of stuff. Now, I love off the plan. Used correctly and understood, it can be a fantastic opportunity to get some great results. But you've got to understand, once again, the market. And one of the challenges that we sometimes have with off the plan is when we settle, we can have some valuation issues because everybody's settling at once, particularly if it's a bigger block of units. If it's a small block, you probably won't have that. If it's a larger block, you may come into some valuation challenges. That doesn't mean that valuations are poor across the board. It doesn't mean that you've bought a dud property. It's just the banks managing their own risks. Another thing you might have is some challenges leasing the property, because you may have 50, 60, 80 units all settling at the same time, therefore, and only a certain amount in the rental pool that are looking to rent these. So it's really important that you have a quality strategy with your rental manager. That they need to have planned how they're going to deal with that. I'd look at oddly timed leases that might be 8, 9 months or 11 months. Make sure your lease doesn't finish at Christmas, because then you'll have an extended lease period. You may look at a rent-free period. Don't automatically drop your rents. That can start a cascading effect with rents, and then people get a bit wigged out and they think I've bought a dud investment. When you're buying apartments, particularly a new block settling all at once, then there can be those challenges that you've got to get through. But understand they're a normal challenge and part of a short-term problem. And the same can be said for house and land, guys. Just because you're buying a house with some land associated doesn't mean that you're immune from those, particularly if it's in a new area, a new development. You can have some of the same challenges, and it's a normal part of investing. And what we do a lot of successfully is coach our clients through those small challenges for the bigger picture. Whether you're an established investor that's had some results, looking for better results, whether you're very experienced and you're looking to be taken to that next level, or whether you're just getting started, guys, we have these information nights, property investor nights, nationally across Australia. We also have a team in New Zealand, but here today we're talking about Australia. And we have these investor nights. They're free. Come along. We have our fantastic coaches. They teach so much great information, and they're right across Australia, Sydney, Melbourne, all the major capital cities. They'll cover off all sorts of wonderful information for you, from stats and demographics and data that I know you investors love, down to some of the basics, through to your more advanced strategies, how to set a strategy, what is your gap, what are you looking to create, how are you going to create it, how long will it take you to create, all that awesome stuff that you need to know as an investor before you go out buying. So come along to one of our investor nights. We look really forward to seeing you there. Like I said, major capital cities. We're also in a lot of the smaller areas, so Toowoomba, Newcastle, down in Tasmania, Canberra, you name it, guys. We've got investor nights. So there's a link that's just on the next to the live video that I'm doing now. Click on that, register yourself for that. I might even see you at one of the investor nights, particularly if it's a Victorian or Melbourne one. I look really forward to seeing you in person. So make sure you get along, educate yourself before you take action, or educate yourself in order to get a better result. And we look forward to seeing you there with heaps of fantastic information for you. Take care. Bye-bye.